Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the ES, and what we're seeing is consistent support at the continuation middle band. This is why I always use the continuation middle band. I don't care if we're rolling over. This band continuously works as support in a pullback from the middle band. So going into today, the middle band sits at about 25.35. Today is all about the Fed. 2 o'clock we'll get the Fed decision. I would expect us to trade around a little bit. I'd expect a little bit of a move, continuation of the move higher into the Fed meeting. We talked yesterday about how they typically walk up the Fed meeting, and there was no reason to expect anything different. Yesterday was an up bias day. I get this question every time we have a Fed meeting. How do we trade the Fed meeting? Don't game the Fed. Don't put a bunch of positions on right before the Fed because you think you know what the Fed's going to do or what the reaction is going to be to what the Fed's going to do. That is a great way to blow up. After the Fed announcement comes out, there's going to be, what we do in our room is we find the range. There's an upside, there's a downside, there's a midpoint. We have ways of doing that. And then we go ahead and we find a trade. And, because that range will do one of three things. It'll break out, it'll break down, or we'll trade in between. Either way, there's risk markers that are identifiable in there, and then you can trade it. You can trade it profitably and responsibly at the same time. So that's our approach, and I would suggest, that you approach it the same way. I'll be looking for 25 on the downside. I'll be looking for the 39.40 area on the upside. If we break below the middle band, then the bears must keep it below middle band and ideally close below 19. That sounds like a ways, but if we get a negative Fed reaction, 34 to 19 is nothing. If we get a positive Fed reaction, then you really need to see them stay above 40. And you would want to see them go back to work on highs. The contract highs would be 47s. The continuation high is 54. Traditionally, though, you need to see new continuation highs in order to continue a move higher. If you just do contract highs, it's going to create on this chart, as time goes on, it's going to create a lower high. It doesn't matter what month you're in. You can't create a lower high in the continuation chart, because the sellers will come in. So if the bulls are going to take this higher, they need to take out the 47 contract highs and then go to work on the continuation highs. So trade around it. No big positions ahead of the Fed. See how the reaction goes. And if it's higher, fine. If it's lower, fine. Jump on the winning team and ride them to victory. I will catch everybody tomorrow morning with another webcast. Come check us out on Twitter at Princeton Trader. Come check out the website. Come check out the chat room. Come trade Fed Day with us. I will catch everybody tomorrow morning. Trade them well.